In an unprecedented military operation on January 3, 2026, the United States conducted large-scale strikes on Venezuela and captured President Nicolás Maduro and his wife, Cilia Flores. This represents one of the most dramatic foreign policy actions in recent history, with far-reaching economic implications that will reshape markets, oil flows, and geopolitical dynamics across the Americas. Today, we're analyzing the economic impact of this extraordinary event. Venezuela holds the world's largest proven oil reserves, approximately 300 billion barrels. However, under Maduro's regime, production had collapsed from over 3 million barrels per day in the 1990s to roughly 700,000 to 800,000 barrels per day due to mismanagement, underinvestment, and sanctions. President Trump stated the U.S. will run Venezuela temporarily and work to tap the country's massive oil reserves. This creates several economic scenarios. Short-term volatility. Oil markets will experience significant uncertainty as investors assess production disruptions from the military strikes and political instability. Medium-term potential. If the U.S. successfully stabilizes Venezuela and removes sanctions, there's potential for substantial production increases. Long-term implications. Revitalized Venezuelan oil production could add 1 to 2 million barrels per day to global markets over several years, potentially lowering global oil prices. Currency and financial markets. The Venezuelan bolivar, already in hyperinflationary collapse, faces additional uncertainty. Regional currencies, particularly in Colombia and Brazil, may experience volatility. U.S. defense contractors and oil services companies may see stock movements on speculation about Venezuela contracts. Strategic energy considerations. Trump explicitly mentioned the U.S. would gain access to Venezuela's wealth and resources. This represents a major shift in U.S. foreign policy with several economic dimensions. Oil supply security. Venezuela is geographically close to U.S. Gulf Coast refineries. Venezuelan heavy crude is well suited to U.S. refining infrastructure. Could reduce U.S. dependence on Middle Eastern or other foreign oil sources. Economic control questions. Trump stated the U.S. will run the country until a transition occurs. Defense Secretary Hegseth suggested accessing additional wealth and resources without spending American blood. This raises questions about profit sharing, resource management, and long-term economic governance. Sanctions relief impact. Years of U.S. sanctions have restricted Venezuelan oil exports. Sanctions removal could immediately boost production by 200,000 to 500,000 barrels per day. Major oil companies that exited Venezuela, Chevron, ConocoPhillips, ExxonMobil, may seek to return. Latin American economies. Colombia shares a 1,370-mile border with Venezuela, hosts approximately 2.5 million Venezuelan refugees, faces economic uncertainty from potential conflict spillover, may see reduced migration pressure if Venezuela stabilizes. Caribbean nations. Venezuela's PetroCaribe program provided subsidized oil to Caribbean countries. These nations face energy security questions during transition. Potential for new economic relationships under U.S. oversight. Brazil shares a border with Venezuela. Ideological tensions between Brazil's government and U.S. intervention. Economic implications for regional trade bloc Mercosur. Regional trade and investment. Massive uncertainty dampening business confidence. Potential for infrastructure and reconstruction contracts. Questions about how international law and sovereignty concerns will affect regional commerce. Geopolitical economic shifts. China's economic interests. China has invested heavily in Venezuela with loans exceeding $60 billion. Venezuela owes China substantial debt, primarily paid through oil shipments. Chinese companies have significant stakes in Venezuelan oil projects. This intervention jeopardizes Chinese investments and creates economic tension. Russia's position. Russia has also invested billions in Venezuelan oil and military equipment. Russian oil company Rosneft previously held significant Venezuelan assets. Economic and strategic setback for Russia in the Western Hemisphere. international law and business confidence. The intervention raises questions about sovereign risk in emerging markets. May affect how international investors view U.S. respect for sovereignty. Could impact investment decisions in other resource-rich nations. The drug trafficking dimension. The Trump administration justified the operation partly on drug trafficking charges, with Maduro indicted for narcoterrorism. Economic implications include cartel economics. Venezuela under Maduro allegedly facilitated cocaine trafficking from Colombia. The Tren de Aragua gang, which expanded from Venezuelan prisons, has international reach. Disrupting these networks could affect drug markets and prices in the United States. Port and transit control. Controlling Venezuelan territory means controlling key drug trafficking routes. Potential for reduced cocaine flow to the United States. Economic impact on enforcement costs and addiction-related expenses. Economic uncertainties and risks. Military and stabilization costs. The U.S. military intervention and ongoing presence carries substantial costs. No clear exit timeline has been provided. Potential for insurgency or resistance imposing long-term security expenses. Political legitimacy questions. Trump claims Vice President Delcy Rodriguez was sworn in and is cooperative. However, Rodriguez publicly demanded Maduro's release and called him the only president. This contradiction creates uncertainty about who actually controls Venezuela's economy. International pushback. Many Latin American nations condemned the intervention. Russia, China, Cuba, and Iran strongly opposed the action. Economic isolation or countersanctions remain possible. United Nations Security Council meeting requested by Venezuela. Legal and constitutional questions. Several U.S. lawmakers criticized lack of congressional authorization. Questions about long-term legal framework for U.S. control. Constitutional concerns may affect business and investment confidence. U.S. establishes effective interim administration. Major investment in oil infrastructure rehabilitation begins. Venezuelan oil production increases to 1.5 to 2 million barrels/day within 3 to 5 years. Economic reconstruction attracts international investment. Regional migration crisis eases as Venezuelans return. Net impact: positive for global oil supply, U.S. energy security, and Venezuelan people. Synergy. European companies waiting for clearer legal framework. The capture of Nicolás Maduro represents a watershed moment with profound economic implications that will unfold over months and years. Key takeaways. Oil markets face uncertainty but potential for significant new supply in the medium term. U.S. economic interests are now directly tied to Venezuelan resource management and stability. Regional economic dynamics have been fundamentally disrupted, with unpredictable consequences. International economic relationships face strain, particularly with China and Russia. The path forward is uncertain. Success depends on stabilization, legitimacy, and international cooperation. As this situation develops, we'll continue to monitor the economic implications for markets, energy prices, regional stability, and global geopolitical economic relationships. This is undoubtedly one of the most significant economic geopolitical events of 2026, and its full impact will only become clear in the coming months.